I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD.
The USDA's February WASDE report on Tuesday may not have been highlighted much for the U.S. crop balance sheets, but South America was a head-turner for the month. The agency left the U.S. corn and soybean balance sheets unchanged with the 2024 and 25 carryout estimates at 1.54 billion bushels and 380 million bushels respectively. Wheat ending stocks were lowered slightly to 794 million bushels due to a higher domestic demand forecast. But eyes were on South America as the USDA cut Argentina's soybean production estimate to 49 million metric tons, down 3 million from the January forecast. The agency cited hot and dry weather in the country as the reason for the downward revision. Argentina's corn production forecast was also reduced by 1 million metric tons. With no changes to Brazil's soybean estimate, the country's corn production forecast was cut by 1 million tons to 126 million. The agency cited a slow start to the safrinha corn planting progress as a cause for concern. China was also another highlight in Tuesday's report, according to USDA's chief economist Seth Meyer.
Lower Chinese wheat imports, lower Chinese rice imports, lower Chinese corn imports. Kind of a theme across global balance sheets. One could argue a bit on the supply side, but maybe overall macroeconomic weakness in China part of the story as well.
Strong U.S. corn demand raises the question of whether the USDA will raise its export forecast in future reports. The current export pace sat 5 percentage points ahead of the 5-year average as of data released last week. The hog market has experienced its fair share of resilience since rallying late this summer, and that's because market fundamentals have been largely supportive. The USDA's latest cold storage report showed U.S. pork inventories sat at 400 million pounds at the end of December, and that was down 6% year over year and the lowest December inventory since 2021. Multi-year low inventories have resulted from record pork exports and strong domestic demand offsetting higher production. Recovering hog prices led to better producer margins in 2024. Iowa farrow to finish margins averaged $4.70 per head last year after averaging $24 losses in 2023. Feed and non-feed production costs have remained sticky in recent months despite a steady decline. Brazil's corn and soybean exports kicked off 2025 on a softer note. Brazil's Ministry of Development, Industry and Foreign Trade reported that soybean exports totaled 1.07 million metric tons in January, down 62.4% year over year. China remained the top destination during the month despite volumes falling nearly 60%. Total soybean exports have been declining over the past few months compared to a year ago. Brazil's soybean exports typically pick up in February as more supplies come online from harvest, and exports are expected to hit a record in the 2024 and 25 season due to sharply higher production. Corn exports totaled 3.59 million metric tons last month, down 26% from a year ago. Iran was the top importer, helping limit the decline in shipments. Brazilian corn exports fell to a 3-year low in 2024 due to lower supplies. Higher demand for animal feed and ethanol production has dug into export potential. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.